Okay, hello everyone. Welcome to Trading Strategy Guide's webinar of today, which is the ultimate Fibonacci trading strategy. Now, can I please get a bit of confirmation that everybody can hear me and see my screen? That would be a good start. Okay, guys, sorry I can't at the moment see any comments popping up in my screen, so please give me 1 second. Okay, so at the moment I can't see anybody commenting, so but I do hope that you are here. So yeah, give me some kind of live sign ideally, but if not, I'll just get going. Here we go. Okie dokie. So today, I'm going to be teaching you how to use the Fibonacci tool and how to implement it with a strategy. And yeah, hopefully you will get quite a lot of value out of this. I think the Fibonacci tool is really very important. I use it all the time in my trading, really. And I would be really good if maybe anybody can give me some write in the comments section whether you're completely new to Fibonacci or whether you've already worked with it before. That might be quite helpful. So I'll have a look at that in a second, but I'll just introduce myself a bit more in the meantime. Okay, so just first of all, a short disclaimer that all of the information provided here is for educational purposes only. Nothing should be considered as a buy or sell recommendation. The risk of loss in trading stocks, commodity, futures, forex, and options is substantial. Before trading, you should carefully consider your financial positions to determine if trading is appropriate. And it is possible to lose more money than the full value of your account when trading. And past performances is not necessarily indicative of future results. So just to get the disclaimer out of the way, sorry for that. And here we go. Okay, so one problem with Fibonacci drawing is that initially, when one's new to it, it's easy to get it right or not entirely accurate, and that's really where you can make wrong decisions when the Fibonacci tool isn't used correctly, and that is indeed a big problem that traders face, starting traders face. And the Fibonacci tool that comes standard with MT4 and platforms like that, they're good, but you need to, again, there's no instructions, so it's basically up to you to work out how to apply it, and there can be issues with that. So sorry, I'm just skipping here through a few slides. Yes, we've covered that. So So I'll get my groove. I'm just gonna get into the swing of things. Yeah, so basically I will teach you how to use the Fibonacci tool manually, so you know how to use it for yourself without any assistance. But actually, we trading strategy guides have developed a really exciting tool that really boosts your Fibonacci trading, and we'll get to that at the end. But we'll basically give you both. So we'll give you how to do it for yourself, and then also essentially offer you a tool that will really assist you further with Fibonacci trading. Yeah, that's right. You'll be the Fibo master after this trading. Okay, let me just quickly have a check again to see if any comments have come in. Okay, great. I see that a couple of people say they're new. And somebody says they work with Fibonacci retracement feature a lot of times. Okay, great. So basically, I'll just start from the beginning then. I won't assume any prior knowledge, so that we're all on the same page. Okay, let me go back to my slides. Here we go. Okay. Okay, so basically, let me introduce myself a bit first here, and for whom this training also is. So, like I said, it's really for anybody. If you're brand new to it, you can get going with it. But it's really just mainly that you need to have the right commitments as a trader to stick to a certain trading plan, to stick to a system and consistency. But it's really good for anybody. So it's good for beginners. It's might be good for advanced traders as well who look to learn a new trick, especially when we're going to also offer a more advanced in-depth course, and that would be where we are going to show in more detail how to trade essentially retracements and pullbacks in the market, such as you going basically you entering the market at ideal points within a trend. And so for advanced traders, there's definitely something to learn here as well. Yeah, and obviously we all want to make some good money. So of course that is for anybody who wants to learn money through trading, which makes obvious sense. That the training is good for that too. And basically, let's just continue. You'll get the gist of this. Okay, sure. So this training is not for people who obviously don't hate trading, but I assume you wouldn't be here anyway. Yes, trading does require effort and work initially, and you can't expect to have fantastic results straight away because you just need to simply get into the practice of it, build experience. So you need to have patience with the process, but overall, it's definitely a great avenue to become more financially independent. Okay, so basically, in today's session, we're gonna be covering some basics about the Fibonacci tool itself and how it works, then the strategy itself, and then at the end I'll wrap it up, and we'll also give you an offer for this tool, for the Fibonacci tool that we've developed, and by that time we should be more or less complete. So yeah, so basically we'll know after this course, you'll know how to draw Fibonacci lines, generally how to trade them in in a general sense. Basically the strategy itself, and basically come out potentially with this tool. Let me just skip through a few of the slides again. Sorry guys, we're soon at the point where we get into the crux of it all. Okay. So just a little bit about myself. Basically, I am now a full-time trader. I used to work in retail, wholesale and retail commerce. My parents had a wholesale business, and I then later opened up a retail shop and so on. But basically, over the last couple of years, I've fully transitioned out of this and established myself with a trading approach that is combines a lot of things and has Fibonacci as part of it as well, a very important part of it. I do add other things as well to give me further confirmation. And again, in the advanced training, that will be more discussed in more detail. But yeah, this is me here. So, and I've joined up with Trading Strategy Guides to bring some more education out, because I think it's so important to start off on the right foot. That you get knowledge that makes sense, that is kind of solid, that doesn't lead you down the wrong path where you lose money unnecessarily. So this is where we're trying to come in here and help you out. A little bit about me. Yes, we've covered this. Okay. Yep. Okay, right. So we've gone through the introduction bit. Sorry about the messiness here, but we're now through. Okay, so basically, to start out, we're not going to spend a lot of time on the nature of Fibonacci, because I think most importantly, I assume you want to know how to use it, but basically, in general, the Fibonacci sequence is a sequence of numbers which have a ratio to each other, so they have a proportion to each other, and that ratio essentially appears in nature, in all of life, really. It's a kind of geometry that seems to be reflected in everything of life. So I will show you some examples later on. But basically, you have these numbers that create proportions, and why it's relevant in financial markets is because the market is essentially another part, also a part of essentially the material world, and it appears to also move in these proportions. So you get basically swings, up and down swings, and they generally quite often adhere to these proportions that you find all over the place in life. So the person who came up with this is a guy called Leonardo Pisano. He was also known as under the name of Fibonacci. So he had quite a few names he was known for. So hence the sequence is called Fibonacci. And he was born in Italy in the Middle Ages, and basically he observed nature, and he was starting to try and join dots as to why do plants grow in a certain way, like they branch out in a certain way, and why do we find certain things aesthetic, like why do we find certain faces more pleasing than others, and Leonardo da Vinci was also quite interested in that whole subject area of how does everything in life kind of work so well? How is everything so well designed? And that's where he came up with this observation of these ratios. So let's dive into that a little bit more. If you've got any questions, by the way, just write them in, and I will check them from occasionally. So let me just see. 618 copy. Cool. Okay, now so no questions so far yet. That's all right. So basically, the Fibonacci sequence is created by essentially start counting, and you basically add the previous number, the previous number to the next number. So this is why we start off, say, simply with 1. You say, okay, 1 plus, because there's no other number, plus 1 is 1. Sorry, 1 plus 1 is 2. Then 2 plus 1 is 3. 3 plus 2 is 5. 5 plus 3 is 8, and so on. And what you start to get here as you go higher and higher up in these numbers, you get to a ratio. So, and this ratio is what is associated with the golden, that's why it's called the golden ratio, which is the key to this Fibonacci number sequence. Okay, so in this next chart, you will start to see what happens here as we added these numbers up. So 1, 2, 3, 5, 8, 13, 21, and so on. And now what you're going to do is you're going to always divide one number against the previous number. And you don't have to do any of this to trade. It's just to give you a sense of how that ratio comes about. So if you look at these examples here, 5 divided by 3 is 1.666, 8 divided by 5 equals 1.6, 13 divided by 8 is 1.625. So you can see that the ratio is quite close. It's getting more and more towards a sort of an average number. And the further you go along, especially when you get to the higher numbers, like 144 divided by the previous number and so on, the result becomes more and more complex, and it becomes more and more the same. So this 1.618 ratio is that key ratio that appears everywhere, and that basically in trading we're going to use to find spots where price is going to bounce. It's going to hit a certain point and turn around, which would then be a good entry signal for trading in the continuation direction again. So that's really all it is. Any questions at this point, guys? Let me know. Oh, sorry. Okay, cannot see anything. Let me have there, guys. One second, I'll sort that out in one moment. Okay, guys, can you see this now? Yes, sorry, I'll repeat that. No worries, I will do that. Great, okay, cool. So you're seeing it again, fantastic. Now, I've just noticed also that I seem to only be able to see the latest 5 comments, so sometimes I might miss a comment. And I'm really sorry about this comment glitch, because obviously I don't want to miss one of your comments, but I will check it more frequently, and go from there. So looks like everybody can see it again. Let's continue. Great. Okay, so if I go back here to this slide, then so think of the sequence of numbers. You basically, if I go back to this one here, so these numbers at the bottom, just to recap that quickly, the Fibonacci sequence is simply an addition of a number in a row. So basically you start out with 1, and then you add 1 with 1, that equals 2. You add 1 to 2, that's 3. You add 2 to 3, that's 5. This is how a Fibonacci sequence of numbers is created. And the next point is to divide these numbers with each other, and what you tend to get to the same equation, to the same result, more or less. And in fact, the higher the numbers you use of that sequence, the more precise that result will come towards a 1.6180 and on until infinity. So here on this slide you can see examples of those. So initially, when the numbers are small, the ratio is a bit more crude still, so you get 1.666, and then the next one is 1.6. But then when you start to get to 21 divided by 13, you're starting to get pretty close to the true average ratio, which is 1.615, but eventually it goes to 1.618, like you can see on this slide here at the top right. Here you see 1.6180339 and so on. So really, this is just a background of why we will start to use these numbers in trading. So you don't need to understand it too much more than just have a rough grasp of why these ratios come about. So, and now you can have a look at examples actually all over the place, all over nature, where you find this ratio. So in this example here, if you take this distance here, so say your lower arm relative to the length of your hand, you will roughly get this ratio of 1.618. And that's just one example, but you literally find these proportions all over nature and in your body. And that's actually why I think the closer things actually are to that ratio, the more we seem to be perceiving things as beautiful. So our sense of aesthetic is definitely connected to this ratio and this kind of balanced proportion. So somebody who got a face that is very balanced and has these proportions quite accurate, we tend to find those people extremely beautiful. Whereas people with wonky and skewed faces, we don't tend to see that so immediately as aesthetic, and that has everything to do with this ratio, oddly enough. Here's another example. This is a starfish, and again, the way it grows is that it incorporates this ratio. If you take this distance up here, from that point to that point, and this distance from here to here, you will get the same ratio. And you can find uncountable examples of that. The most classic example is the spiral, or the torus, and the reason why this looks so beautifully and perfectly geometric is because the way it increases or decreases in size, and the way it turns into, is all based on this golden Fibonacci ratio of 1.618, more or less. And so we've got to, I think people just started to realize that the market tends to behave in quite a similar way. It seems to adhere to similar proportions. And in a way, once that was discovered, I think it started to generate momentum, because when traders started to use the Fibonacci tool in their trading, they would then start to place orders at certain key levels that had to do with the Fibonacci numbers. So the market would start to react kind of even more strongly and accurately to these numbers. So in a way, it's partially self-perpetuating, but it's also partially already there, simply as a pattern of life. Let me just pause here again and see if there's any things that... Okay, cool. There's obviously some people still have a bit of problems. Not sure why. I hope it's not everyone, and I'm really sorry for the people for whom it is stuck. Can I get just a couple more confirmations again that people can generally hear and see the movements in the slides? Okay, well, don't see any new comments, so I'll just continue. I assume that you'll get them. Good. Okay. Thanks. All right, so let's just hear a few more examples of these proportions and flowers. Here, that's apparently Mr. Trump's haircut seems to have the golden ratio in it as well. So we've covered that. Okay. So perhaps it's now a good point to actually start to go into some charts to begin to show you how this all works. So let me switch you over, and we'll get going very quickly. Okay, so I'm just going to start giving you a few starting guides to how this all works. So assume everybody can see my chart, and it works on any chart, on any instrument. That doesn't matter at all. And I think most people use the MT4 platform, which is what I've got here too. If you use something else, then you will have to find the Fibonacci tool within that platform. I only know MT4, and in MT4 it's up here. It's basically this tool here. I don't think you can see my mouse, but those dotted lines with the F, that's the one. So if you click on that, and then you basically hold on your mouse button, click and hold on your mouse button, and then drag it across, you start to see these lines appear. And those are basically the Fibonacci numbers that the program has already built in. So if I'll zoom in a bit here, you can see down the bottom here on the side, 0, 23.6, 38.2, 50, 68.1. And what that means is simply that from the starting point, from wherever you begin to draw your line, to wherever you drop the line, you have basically 100% or 100 points. So the starting point is at the 100 level, and the end point is at 0. And basically what these numbers in between then therefore mean is the 23.6, for example, the 23.6 level is 23.6% of basically this entire distance is in this section here. Then the same happens for if we go to our key golden ratio, which is the 61.8. You can see that basically this distance here is 61.8%, and versus this distance, which will be the remainder, which will be essentially something like 38.2%. So this is what these numbers mean. And what we're looking for in trading is we're wanting to use this tool when there is a trend established, so when price is moving in one direction, and then price makes a correction down. And what we're waiting for is for price to approach mainly those three levels, the 61.8, the 50, or the 38.2, and to show some kind of reaction to them that would indicate that the trend continues in the same direction as it was before. That's just a very rough guideline. I think there's a question has come in. Let me have a quick look. Okay, John, the most ideal time frame to use the Fibonacci, in principle, it works on any time frame because it is essentially it happens on any scale. But you've got to bear in mind that the higher the time frame, obviously, the more traders and orders are really behind a move. So you've got to always bear that in mind, that if you want to use if you want to trade on a smaller time frame, you can't expect really big moves. You will need to keep your trade targets and so on to that scale, but it is a bit more risky, in my opinion, to stick to small time frames, or to trade Fibonacci or any strategy on small times, simply because you don't have enough confirmation in the smaller time for people to really, for the market to really give you a sense of, yes, there's enough people to confirm a move in one or the other direction. So in my opinion, I would say use Fibs for trading purposes probably only from the 1 hour chart upwards. But you can use it on smaller time frames as well, to get a general sense of, if you want to look at the smaller structure, that's good too. But I think probably from 1 hour time frame is probably best, I would say. Okay. So we've got. Sorry, there's some noise that started somewhere here. Sorry about those, guys. So, any studies done to see which time frame is the most traded? I don't know, to be honest. I don't know if there's been. I know that there's been studies done to confirm in general the that whether the levels really work, and that study definitely has shown that the only levels that are really reliable are the 38.2, the 50, and the 61.8 levels. That's probably all I can tell you in regard to that question. But you can, it's a tool that you have to use in conjunction with a few other things, and I think it's better. You get extra confirmation on its own. It's already good, but if you get a little bit of extra confirmation, which I'll discuss a little bit here, but more in the advanced training, you'll get better results that way. Okay, so I hope that answered the question for the moment. Let me just quickly reference my slides. Okay. So here we are. So basically, the Fibonacci tool is a tool that you want to only use in trend, when price is trending. So you don't want it. Don't want to use it when, for example, price is in a range like this, because the retrace it relies on price really moving in one direction rather than sideways. You could only use it within a range actually if you drop down in a time frame. So perhaps you can say, okay, here we've got a downtrend, but in the overall structure it was a range. But you could have probably used that tool on that move, but you would have had to drop down in a time frame. And to show you some example, let's have a look at this briefly. So we are in a range on a 1 hour chart. You can see it's going up, price is going up and down. But what you get if you say then switch to a 15-minute time frame, for example, and just find that move again, sorry. Where are we? Sorry guys, I keep on losing where I am. Okay, don't worry about it. Forget about that example. Let's just stick to where price is now. If we look, so I'll be back in 1 second. I'll just mute it for a second. I'll just try and get rid of this background noise for one moment. Okay guys, I'm really sorry about this background noise. It shouldn't be too long. I didn't expect there was a worker coming. So as long as you can hear me still, I hope we can continue. Okay, so there's a question here from Tobias. Is it okay to assume when there is a pullback to initiate a pending order before price tests the golden percent? It's more risky, and there's only certain situations when I would possibly do that, and those are in situations when there is a very clear established trend and certain elements make me very sure that the trend isn't over yet. So, but that requires definitely much more experience, and it requires more time than what I can show you in this webinar today. But in the advanced training, we will definitely discuss situations when it's good to trade a pullback, and when it's good, when you can place a pending order, and when you need to wait for actually a price reaction to it in the form of a candle stick pattern at the fib. I hope that answers that question for the moment. So so basically, the key that I've found to using Fibonacci successfully is to look at the bigger picture first. So to look at bigger time frames to see what price is doing on a larger scale, and then to come down to a 4-hour or 1-hour chart, or sometimes even lower, and then only once I have confirmation of the overall structure do I then make decisions on the smaller time frames. And that's because as you can imagine, the bigger scale will always dominate the smaller scale. So if there's a trend, or if there's something happening on the daily chart, then everything that happens on the 1-hour chart will be governed by that higher order. So the US dollar CAD chart that I've got up here, I think it's in a really interesting spot right now, because I've been following that for quite a long time. So I'll show you what I mean. Basically, if we go to the monthly chart, I know it's a really big number, but I'll tell you why I'm looking at this. It's a quite good example. So on the monthly chart, you can see that there's been this strong uptrend all the way since 2011 actually to 2015, and trends, and that's again part of what I will be able to discuss in the advanced training more, but trends generally happen in 5 waves, and when you see the strongest move, like you can see here, price moving the fastest, that's the middle wave. And you don't forget about the details of that. Just remember that when you see the strongest momentum, you can generally assume that there will be some follow through. So therefore we can assume that this retracement, this move since that high, is most likely a retracement rather than actually a reversal, and that the price will continue to go down. If I put my Fibonacci from this bottom point to this top point, and the reason why I'm using those 2 points is simply you've got to sort of start to get a sense of significant points, and you can use the Fibonacci tool on the swings in between, within this move, but generally you have to find a significant low and a significant high to get your Fibonacci tool to work right. So if we apply this Fibonacci tool like this, what you see is that from this top, price came all the way down to the 50% Fibonacci level and showed a very strong reaction here. If I zoom in here, it pretty much hit this precisely, and bear in mind, it's on a monthly chart, and we created this big doji. So when we have this long wick at the bottom, it means price obviously tried to go down, but pushed all the way back up. And since then, it hasn't been able to break this. So this tells me on the biggest time frame that we are in an uptrend, right? So then you might want to go just simply one time frame lower, in this case down to the weekly chart, to get a bit more of a sense. And now you can see this was this low point, the bounce at the 50 fib, and you can see, okay, price pushed up, now it's coming back down, and the question is, okay, will it go all the way back down and break down, or start going up? Well, that's where the scale of things comes in, because if we now get rid of this fib, not to confuse you, and because we're now looking at a slightly smaller time scale, I want to see, okay, in this big uptrend, is there signs that we're going to go into this uptrend continuation from here? So I'm going to now apply some Fibonacci levels to this swing, and I can actually go one time frame lower yet into the daily chart, and which shows exactly this move. And what we see here is, okay, so the price broke below the 61.8 fib. However, you've got to bear in mind that there's a couple of other actually important numbers. They are less significant, but they are still relevant. And they are the 78.6 and the 88.6 points. And I know for a fact that this bounced, this move here bounced at the 78.6 fib. You can actually adjust your tool. Are you guys interested to learn how to adjust your tool so that you actually can change which levels are being displayed? Do you want me to take you briefly through the settings of how to do that? Can any people give me a yes or a no on that? No comments so far. Already know how. Okay. All right, so maybe I'll let you just, okay, I've got a yes here. Another yes. Okay. Democracy is winning over. Okay, another yes. All right. I'll show you. Okay, so basically what you do is you have a look, you click on the line of the Fibonacci tool, of the Fibonacci lines itself. So generally this red line with the right mouse, and you go to Fibo properties, opens up this window, and under Fibo levels tab, you can see how the values that are being displayed on the chart are listed here. So you've got the 0, 23.6, 38.2. So what you can do here is you can add extra levels to it. So if I click here on the add button, and then in the level column, you've got to write the value as a with the decimal point. So if I want to get the 78.6 level on the chart, I need to put in 0.0786, and then in the description that will basically just simply show what will actually be shown on the chart, and for that we can put in 78.6%, and then you click on add, and if I then press OK, you can see the next line appeared. So this is how you can add and change the ratios to add whatever ones you want to add. Like I said, the key ones are 38.2, 50, and 61.8. But for the beginning of trends, the lower fibs can be important too. So 78.6 and 88.6. You probably want to add those as well. And like you can see here, we had really strong reaction of the 78.6. So now that we've established we've got a very large uptrend, then within that large uptrend we've had a push up, and this has shown now another reaction to a fib. So since that push we had another strong move up. So now the question is, okay, on a lower time frame yet, can we see if this push is responding to the fib levels? So I'll get rid of this one and I'll get some new fibs, and I go from down here to the swing high, and now you can see again price has started to respond to the 50 fib. If I drop down one time frame lower, you can start to see the reaction a bit better. So we're now on the 4-hour time frame. You start to see, okay, we had an initial bounce. Now we don't know yet if it's going to hold. Like at the moment price is coming down, it might try and test it again. Maybe it goes a little bit lower, but actually still holds within the range and then pushes up. And we've got to wait for that. Now, the reason why I'm showing you this example is because it's a really interesting trading opportunity that you could use, you know, straight away, if you're trading live or whatever, even on a demo account. Because, like I said, on a monthly chart, we know we're in a big uptrend, and if this is indeed a bouncing spot, then that will. Sorry. Sorry, it's my dogs. So if this is indeed a bouncing spot, then actually this move could go pretty high. It could go at least to the previous top, and it should in principle go higher actually. So we're now at the price is about 124.80, and there's at least room to 147. So potentially extremely good trade if we get onto it now. And we've confirmed we've saw several bounces on numerous time frames as we're zooming in, and now we're down to the 4-hour time frame. And now it's a question basically of saying, okay, how and when should I enter? Well, I think unless you are extremely experienced and feel super confident with your analysis, I don't recommend just putting a pending order at a level. I mean, if you would do that, then you would have to put your stop loss really far away. What allows you to actually put a tighter stop loss and therefore increase your order size in a sustainable manner is by waiting for a reaction. So if this price, for example, is going to bounce again and then create another strong bullish 4-hour candle that closes near the high, so like this one here that closed pretty close to the top without much wick, that could be some good confirmation that this level is really holding. And I found that the 4-hour chart is a really good time frame to gauge whether there's really enough conviction behind the move, because in that 4 hours you seem to get enough traders to commit to one or the other direction. So in this particular case, I would wait. We might have to wait till the start of next week still, or depending on how today develops. But if we get a strong bullish candle here again on the 4-hour chart, then I'd be quite happy to enter a buy trade right here. And if you want to be ultimately the technically the invalidation level would be down here. So this is where you would put your stop loss. What I mean by technical invalidation level is if price were to go all the way down here and touch and go beyond those bottoms, then you know for sure that your analysis isn't correct. However, you can try and find, if you're waiting for this confirmation of price reaction, it generally allows you to put your stop loss a bit closer, and we could then look for a lower support level down here. That should be enough space for the trade to go right. So if we just assume this is making a bullish candle at some point soon, then I would zoom out and I would start looking for horizontal support lines. And you can see that, for example, here we've got one, and this is a 4-hour chart, so these support levels are fairly strong. So this one I would be quite happy with. If we get a reaction here, then to put my stop loss down here, just beyond those bottoms, like where the red line is. Don't put it straight right where the wicks end, because if it's too tight, you might get stopped out by 1 or 2 pips, and you don't want to do that. It's highly annoying when that happens. So that would mean that you've got about 170 pips stop loss. But if our analysis is correct, if you remember the time frames that we've looked at, we've got a huge potential to the upside. So in that sense, this could be an extremely good trade. And in that regard, even if you were to say put your stop loss right down the bottom to give it even more space, overall, if you're patient, this could be a very good trade. So this is my main tip for using Fibonacci, is check the trends on multiple time frames to give you a sense of how much room has price to move in your direction. Because if there is if you're in a range on a larger time frame, you can do it, but you just want to really take those trades that give you the best potential. Because if you trade more often with half good setups, you're gonna have more losing trades, and it's not gonna give you an advantage in the end. So let me just check if there's any questions that have come up. Okay, the last questions I see is, do I use 127.2, 161.8? Okay. Yeah, exactly. So these are for targets. So I'm not sure. Do they come up here? Yes. So for the targets, I agree. What you can add, if you want to use fibs levels for targets as well, you would need to go back in here into your Fibo properties. And in order to display them in the same direction, so you don't have to draw 2 tools, you can add a minus level. So if I now add a minus 0.272 and make it display minus 27.2, I get a target up here. And so to get back to your questions, yes, I use these target levels, and the way I make it efficient is by adding those minus levels, which basically means that simply by drawing your retracement fib, you equally get a sense of your target. And generally, the price of a retracement, obviously, if it is a true trend, it should break the previous top and go beyond it. And the first target beyond the top is the minus 27.2, or which would be the equivalent of saying 127.2. The next one higher up would be 161.8, or 61.8, minus 61.8. But you can't always rely on, okay, I'm going to just stick with these targets and hope for the best. You've got to kind of watch what price does on its way along, and you've got to combine it with, ideally with trend lines and support and resistance levels. They give you an extra confirmation. So say, for example, in this case, you have a really you've got some quite solid resistance up here. I'll just make these lines clearer for you. So, and for example, the minus 61.8 target would potentially be just beyond that, or it could be close to the minus 61.8. But you just want to bear in mind, if you've got the strong resistances in the way, and your Fibonacci target is like slightly beyond that, then don't hold out for it to just hit it. And I would say stick to where price stopped in the past. That's a good thing. In this case, of course, if you want to be in this one in particular for a long time, for a longer time frame, period of time, you will have to give this trend time to develop. So what you will have is, it might go up, down, up, down, up for quite long. Sometimes you will get harder pullbacks, but if that bigger monthly trend is really true, then it will go on and on for quite some time. So that's then up for you to decide, okay, do I pull out at a certain high point and then just try and re-enter lower, or do I keep my original position open and in a way, actually, when price retraces again and creates another bullish bouncing spot higher up, then you could say, okay, I might scale in, right? I might add another position, and you can say the first position, I can lock in some profits already by putting it more or less where I would put the stop loss of my second order. So, and that's how you can, on big trends, that's how you can start making good money by scaling in once you've got confirmation of trend going higher. Hope that's clear. Okay, can't use the extensions. Okay, sorry. So Dave is asking, what time frame do I trade from? Like I said before, I look at the bigger structure, sometimes as big as monthly, but generally I tend to look at trends on daily time frame. So is price moving nicely in one direction on a daily time frame, and then I tend to trade on 1 hour or 4 hour charts for my entries and for my pullbacks. Then the second question from Dave is, why is it called a fib tool when the levels used aren't fib numbers? They some of them are fib numbers, but so most of them are fib numbers except the 50 and the 100. And the reason why they have shown to be relevant is because obviously the 50 level is the exact midpoint between the start of the swing and the end of the swing, and simply because it's the middle, it has significance. But you're right that it's not a Fibonacci connected number as such. The other numbers are, I don't know from the top of my head exactly where these ratios come about, and I don't really care so much whether they are or not. I mean, I don't really care so much whether how the mathematics come about, but for sure, simply out of price, proof, the 3, 38, 50, and 61 are simply the key ones. Okay, so then would it be safe to say buy if price breaks above 61 and sell breaks under 61 majority of the time? No. So Hussein, I would not recommend that at all, to say, okay, I'll just go in the other direction, because you want to generally feel, okay, price is going in one direction, and if there is a trend established, then for it to really for the likelihood for the trend to just go the other way, well, you got to wait for more than it just breaking below the 61.8, because there could be just a deeper correction in place playing out, or there could be a complex ranging that might happen. Sometimes also when the sell-off is really strong, you get this push through, but then it doesn't really go further, but just the wicks maybe go a bit further, and then you can get a sense of, oh, it's breaking, but when it's not. So I would definitely not recommend that. That's where actually moving averages come in really handy as a confirmation of the trend strength, which is why I've put them on this chart, and I will talk about this more again in the advanced training. And I think I've got to actually speed up because I'm right behind schedule, I've realized. But basically, yeah, when you have a short-term moving averages like this band of 2, and this long-term moving average is this orange one, when they are in the right alignment, they will give you a better sense of how strong the trend is and how deep the correction goes. If they break through them, then it's a bit more of an intense correction, so you definitely want to wait for confirmation then, and so on. But I'll talk about that more in the other webinar. Stephen is saying that the swing high looks like a bat. I've actually, to be honest, never heard about a bat pattern. So I'm not quite sure. Unfortunately, I don't really know what sort of pattern that is. What I tend to like to do in terms of pattern drawing is in a trend. Trends happen in channels. So you can see that at least on one, on this time frame, and sometimes the trends are when they're so strong, actually they shoot over the trend channel and then come back in. So actually, when you look at this channel, you've got connections here, you've got obviously connection points here and here and here, and then it went out again. So it didn't establish a clear channel on this time frame, but generally once they break, then you know that obviously a correction is due. If you make it on a smaller time frame yet, on say on the 30-minute chart, and go back to this swing here, then you start to see within this bigger trend, you've got a channel, a small channel, like so, and then you have a break, but then a continuation because you're part of a bigger channel. And often the corrections then also happen in a channel. So in terms of those kind of, I like to use those for trend, and then other patterns definitely come in handy for corrections, so triangles and things like that. I'm not sure if this answered your question, but that's sort of just my quick take on that. When do I define a break in the trend? Okay. Again, that's unfortunately we don't have time for going into that detail in this course, but we'll. I think if you actually get the Fibonacci tool that we've developed at the end, you get the advanced training course for free. So we can talk about all of that there. But in principle, you've got to, I'm using waves. So if you look at it on a daily time frame, very quick explanation. On a daily time frame overall, this would probably just be one wave out of 5 waves of which a trend consists. But if you go to the 1 hour time frame, you actually have a complete 5 wave, 1, 2, 3, 4, 5. So you've got to always bear the scale of the trend in mind. So in a 1 hour time frame, we have a complete trend, then essentially a reversal or a break of the trend. But obviously on a larger time frame, it's merely just the beginning of a bigger trend. And you'd say this 5-wave trend is just one wave on the daily time frame. Then we have wave 2 going down, will be stopping somewhere here most likely, and then another wave up, and so on. So you've got to keep the scale in mind. Yes, Don, I've added price to the Fib numbers listed on the chart. I would have to look up how to do that. I've got it on my other MetaTrader platform actually enabled. It's just a little code you have to put in when you type in in the Fib level settings. So that's definitely handy. Fortunately, don't have time to cover that right now. Okay, let me go quickly back to the slides so that we don't lose completely track of time. I'm just going to quickly browse through, see where we can pick up from again. Okay, so just a quick note. Obviously, this should be quite obvious, but you always draw the tool from earlier on to basically the point further ahead in time. So in an uptrend, you go from the bottom that's obviously earlier in the past to the high. And in a downtrend, if I were to now just assume that this swing is a downtrend, then you obviously start from, again, the past and go towards the current time, so that you get your levels in the right order. If you draw them other way around, you'll get confused and it won't quite work the right way. There's some methods who do use it the other way around, but that's not how I use it, and that's not how most traders use it. Okay, so we've covered that. Then what else? I'm skipping through my slides here again. Okay, so with the strategy that I've been talking about, like I said, generally the safest level to put your stop loss, if we go back to the 4-hour chart here, put my fibs back on. Ultimately, the safest level to put your stop loss would be down here. But we don't know how high this is going unless we're really confident with our analysis. In this case, I am, because I've looked at it on all time frames. But if you haven't got that clarity, then you can't assume the price might only go as high as the previous top, even if it bounces. So if you were to enter a trade about here now and put your stop loss here and your target up there, then you don't really have a good, you stand to lose more than you stand to gain. And that would make it not an ideal situation to put your stop loss then all the way down here. So in some ways it is the safest, but then you have to make sure that your target is realistically at least as far away as your stop loss, or ideally further away. Other than that, you might need to wait for more confirmation, for more price confirmation. So even say if you enter price higher up here, but because you've got more confirmation, you might actually be able to just put your stop loss already below these bottoms. And then that gives you a better reward to risk ratio again. That gives you probably a 2-to-1. So your target if your target were to be up there, then it's about 2-to-1. Really important aspect as well. Okay, so I think that's pretty much it for today. I'm sorry that I've went a bit over time. I'm gonna switch you back now to the slides. There we are. Okay. So basically, I've showed you how to use the Fibonacci tool manually, but what trading strategy guides have come up with is essentially a tool that plots them automatically for you, and you can go back in time and you can look at how price has respected the retracements, and it's going to highlight the key zone, so it's going to make your job so much easier, and it's going to in a way take the headache out of drawing your levels correctly, because it does it for you. So if we this is the one basically, so this is the indicator that I'm talking about. And we'll have a quick look at how it works. Basically, if you buy the indicator, then in the members area of Trading Strategy Guide's website, it'll become available as a download. You've got some really good instructions there as to how to install it and set it up in your chart. So that you'll definitely get good support there. And basically, it's easy if I show you now on a live chart instead of on these slides what that actually looks like. So I'll just switch my profile over again. Okay, just switch profile to, oh no, just switch charts. Templates. Okay, so here we are. This is a template that has the Trading Strategy Guide's golden Fibonacci indicator in it already, and we're now looking at actually the same chart, the US CAD, and we've got several things happening here. I'll show you probably on the monthly chart. That might be the best. Yeah. So we've talked about this big uptrend on the monthly chart, and what this tool does is it gives you these lines. It tells you, okay, that's where it uses the points from, and here that little number, that little purple number here, it tells you how far it's retraced. So here it went to 49.7, so it's essentially the 50% level, like we discussed. Now that is just to show you how it does the swings. But then if you go to the lower time frames, then like the 4-hour chart, we start to see actually what we were talking about here. So we're starting to see the swing, and then back down to the 50 fib. And I think once this price starts to show some more reaction, it will start to highlight this for you. It will start to say, right, there's a bounce happening here. In fact, on the daily chart, sorry, you can see that. So if we look at this move from the daily chart, you get your fibs drawn here. It highlights the zone, the key zone, and it will actually tell you these signals on a dashboard down here as well. So it will show you it give you an overview of all the time frames and what the Fibonacci retracements are doing on all the time frames. Here I'm looking at the daily chart, and it's confirming here a buy signal with this green arrow, and it says buy, and that's because of what we were talking about here. It's referring to this push up. It's coming into the golden zone, and that's essentially it. So it can highlight it for you. All you need to do is then just go over it, make sure that you're happy with the setup, and then enter the trade as you see fit. If you're extremely confident, like I said, with the overall structure, you can make a pending order. If not, wait for a price reaction at those fibs, and like I said, stop loss either down here, or if there's more confirmation, closer to the last bottom. So this is really it. You get also these trading alerts, which is what this window when I change time frames is about. So if I change it again, these alerts that come up are telling you Fibonacci golden zone dashboard, US CAD on a daily chart. Price is currently inside the trading zone between a 38.2 and a 61.8 fib level. So that's what we were talking about, basically, that yeah, it's showing up to be in that interesting zone, and it just gives you an alert, so you can, instead of even having to have it looking at the chart, the dashboard alerts will highlight this here in this fashion, and then you can go to it and say, do I like the setup or not, and go for it. So it really reduces a whole heap of time, which is why it's an extremely good feature. So let's go back to the slides quickly. I'll just check if there are any questions. Manuel, yes, I think it is available on Ninja. I think it's available on TradingView, Ninja, and MetaTrader. Yeah, that's right, Barry. That's true. Like they work really well. Yeah, so I'll just show you a bit further through the slides, because there's a couple of other special things I wanted to show you here. Okay, so like I said, we talked about the dashboard. This blue zone shows you the previous Fibonacci zone, the one before where price is currently, so you can get a sense of how well they were respected or not. The trade alerts we've covered, and so if you buy this indicator, then what you're getting with it is basically unlimited lifetime access to it. So it's no subscription based or anything like that. It's just a one-off payment and it's done. You get the strategy report, what we've covered today, for free as a document. You get customer support. You get access to the members area, of course, which will show you extra videos and information around the indicator. And you get, of course, the dashboard with it. You get chat support with the team at Trading Strategy Guides, and basically what it is that indicators can be pretty expensive. I'm not sure. There's a person here who said they bought another one. This one is not very expensive. It's not this number, not even that. It's $99 is the standard price, and it's just a one-time investment. And but for people who are attending today, there's a discount for attendees of this webinar, which I believe is 10% off those $99. So I guess that makes it about $90. And all you've got to do is use this link that I'm showing you now here. I hope you can see that. So that's tradingstrategyguides.com/Fibonacci webinar. And then to get the discount, you just need to enter the coupon code, which is FIB, F-I-B. Now, have you got any questions so far on anything further that I said? Any questions about the Fibonacci itself or the indicator? I think what's fantastic about it is the dashboard in particular, because it just gives you this great overview, and this is really a great feature that a lot of the trading strategy guides indicators come with, which are these overview dashboards that just, it'll just save you having to sift through all the currency pairs or whatever charts you're looking at for hours on end to analyze everything, and it just shortcuts you. So, and I think for that small amount of money, it's really worth it. I like it a lot. I believe that the discount only applies if for people who are buying it now within the next hour or so. I think my colleague in the chat will be able to tell you that more clearly. But yeah, that discount, the extra discount, that won't be there for much longer. It's just really for the people on the webinar today. I think in 45 minutes that should be still okay. I hope that Ben is still around to answer that question in full detail. But I'm pretty sure, I think that you've got about an hour time. The Bollinger Bands method, I have used it. I'm not using them anymore at the moment. I'm using other things, and that's actually the final thing that I wanted to show you, is that if you buy the indicator, you don't just get the indicator, you actually get access to the advanced course as well, which is basically the Fibonacci Explosive Training course, which, like I said, I'll be talking in much more detail about how the system that I use. There's a lot more steps of verification to sift out more bad setups from good setups. You'll get a lot more confidence then with your trading choices, and it comes for free if you buy the indicator, because we'll just want to really help you get started on the right foot. There's no point in starting to trade and then get a bad experience and then you feel disheartened. It's important that you invest in training at the beginning, and obviously in this case it's just the indicator, and you get quite a bit of training for free with that. That's right. So it's the first time that's been released to the public. It's not been available so far. It'll be probably live, maybe recorded some parts of it, but most of it will be live, I believe. So it's really a nice offer that they're offering here. Cool. I believe that will be it. You get a PDF guide to go with it. Here you can see again what you're getting. You get the tool, support access, advanced training, and some PDFs to go along with that as well. Okay, and here's the link again. You want to write it down: tradingstrategyguides.com/Fibonacci webinar, coupon code FIB. Okay, cool. So I think that is all for today, and I hope that you didn't mind me going over time. I'm really sorry if that upset your schedule a bit, but yeah, I thought I needed to cover some other pieces here. So I think that will be it for me. We'll still be available in the chat, and I hope you have a great trading journey, and hopefully we'll hear from you soon again, and you'll come back for the advanced training. Bye for now then. I'll stay around a little bit more if there's any other questions, but for the moment I'm signing out. Thank you.